Morning will start in about 3.5 minutes. Time to reload that coffee mug. Good morning, Forex.Today. Good morning. Yeah. I wasn't supposed to do that. still having breakfast. Problem is, if you drink it too fast, you get a headache. Also make you nauseous. That was ginger. Last flavor was ginger. Wow. Get on with it, Wayne. Get on with it. All right. Guten Morgen. Yeah. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We're here to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm with traders.com. Yep, that's me. No, actually, it's not. Yeah, it is. Yeah, pretty much, kind of. It looks like me. I replaced the picture of when I was 30. So anyway, so that's updated. Very cool. So I'm the founder of this thing called TRADARS. Started out as a FX bootcamp. Then it became Investor Bootcamp. And then I created QuantBox. And then TRADARS. And now I've combined everything into traders.com. So now you have an all-in-one stop, or almost an all-in-one stop for everything you need technically, fundamentally, sentimentally, performance coachally, and then you need an execution partner to execute the trades. But you need to know what to do, why to do it, when to do it, how to do it, and that's what TRADARS is all about. Analytically, of course. So TRADARS and traders.com. Sorry, TRADARS and tradersway.com. Traders.com, tradersway.com. Traders.com, tradersway.com. There you go. There we go. Yeah. So, right? So we can look at things fundamentally and technically. Start with the markets. Euro US dollar surges as US Besant favors lower interest rates.
Scalise, if Mexico and Canada help us on fentanyl, those tariffs will probably go away.
Futures suggest lower open for Wall Street. Target highlights slowdown in US consumer spending. South African economy recovers in Q4.
Euro US dollar price. Forecast, US dollar sinks on Trump's tariffs. Pound sterling strengthens against US dollar as US Besant endorses lower interest rates.
Is Nvidia stock a buy near 100?
Pound tracks broader move against the US dollar among majors. Scotiabank.
Euro extends rally through YTD highs, Scotiabank. Cool, right? So when you log in, this is the first thing you see now. This is our new homepage, and you can chitty chat with other members. This is a members only page. Very cool. You can check the news calendar. What's the next important thing on the calendar? Oh, tonight we have GDP out of Australia. But you're like, but whoa, Wayne, there's a bunch of other things on the calendar today. Yeah, I know. But how come it's not on this calendar? Well, whatever you see on your calendar, okay? And by the way, you can get it here. So let me stop this. It's going to talk again. Okay, you're like, but Wayne, this calendar here. Yeah. Well, it turns out actually nothing else is important. Okay. But sometimes you'll see stuff here, but it doesn't show up on the news radar. Well, the news radar goes an extra step. And it says Does the news on the calendar, for example, Greek unemployment rate, well, does it provide volatility? And if so, is there a reliable, repeatable pattern? If the answer to the first question is no, it doesn't go on the calendar. If the answer to it is no, and then the next question is reliable, repeatable pattern in the results of the news, if the answer is no to that, then it doesn't go on the calendar. So there's two calendars. These are events, and they will create something. Well, they're already considered high level events, so you would assume some sort of level of volatility. But if there's no reliable, repeatable pattern in the result of it, then it's not going to come up. So it's a real time saver. So you can say, all right, well, the next major news on the calendar is in 8 hours and 35 minutes. And that's, okay, Australian PMI. And then later in 11 hours, GDP. So what do we know about this? Okay, Australian PMI, services, okay, it's important. Probably produce volatility. The other thing we know is it won't provide much more than volatility. If it comes out good, does it go up or down? Inconclusive. If it's bad, does it go up or down? Inconclusive. Will it go up or down? Yeah, likely. But we just don't have a reliable idea based on past performance in those scenarios of what direction it tends to go. But we do have that data for GDP a couple hours later. So be cautious of the vol here, but this is the trade. And we have that through this. Isn't that cool? Oh my God. Yeah, it's totally cool. So give us the GDP, and you can assume Australian dollar is going to react the best to Australian news, but that's not necessarily true. Now, I would agree with you, that makes sense, but there's tons of time, like for example, when CAD news comes out, that the CAD isn't the best thing to trade. So again, I understand the assumption, and I would agree with that assumption, generally speaking, but what I think doesn't matter. What the data suggests is what matters. So if Australian GDP tonight in the Asian session is less than expected, there's a scalp, a spot, and a swing on Aussie dollar to the upside. But there's not a scalp on euro dollar. There's not a scalp on pound dollar. But there is a scalp on Kiwi dollar. Ha, 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 yeah. Cool. All right, well, what if it comes up better than expected? There's a scalp, but in the same direction. 66% chance up if it's down, or less than, and 75% of up if it's greater than. Either way, good or bad, there will be vol. Oh, there will be volatility. And in either scenario, it's most likely to go up. So let's look at this trade plan. We can draw the following conclusions about the expected movement of Aussie dollar based on the last 12 GDP growth rates quarter over quarter. So 12 quarters, years of this stuff in Australia. Okay. If the actual is greater than consensus, 75% chance of a scalp to the upside. If the actual is less than, 66% chance the 2 hour will be to the upside. Oh my God. A free man, we crossed it and then went back. Yeah. Glitch. All right. So check that out. This is the level of data that we have. Would you assume that regardless of how the news comes out, there's a high probability of up versus down? No, I wouldn't have assumed that. But that's just the facts. So we can look at them. Okay, up, okay. Oops. Up, 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 up. Or on the other months, up, up, up. Huh. Good to know. Good to know. Everybody else guesses and assumes. Okay. Hang on. Thought I saw something. Sorry, yeah, I thought I saw something and it looked important and now I can't find it, so probably fake news. All right. I don't see anything anyway, so we're good. Oh, look at that. All the scalping thing just updated without me having to refresh the page. You guys ever just sit there? Hey, traders, only show me 75% trades. Boom. There you go. Problem with the higher percentage is there's less pips. Okay. And for me, I only scalp. Oops, this is from a previous conversation. That's my brain on drugs. I only scalp trends, me personally, and so like trading back to support is not really what the wing do. But I could do this skippity scalpy if that's what it's going to do. But based on my fundamentals, I'm not really interested in this. I'd like pound Swissy, but not down. I want up. So I'd pass on that too. You see, like you still have to put your brain to work. But there's a lot of opportunities that might be better. So if this falling wedge is breaking, you could scalp it up to the top, and that would be what you do for the next few hours. You could do that here. You could do that here. Okay, you could do that here. What's going on? Well, as you already know, based on the headline news, Besant has come out and talked about oil down. You know, he's the Secretary of the Treasury, right? Listen. Euro US dollar surges as US Besant favors lower interest rates. Oh, really? How about this?
Pound sterling strengthens against US dollar as US Besant endorses lower interest rates.
Oh, see? So you should know that that's going on right now. And maybe it's not long term, but that's what we call scalping. Maybe there are short-term opportunities in which US dollar weakens, like USD Swiss franc down. See, it's a pattern, but it's not thinking about the fundamentals. So I would say, nah, I'm going to pass on that. But that is a pattern if you were going to sell the US dollar based on what you are seeing in the media right now. Yeah, but Aussie dollar up? Well, I would say fundamentally, that's not the trend that's in play, but If there were reversal pivot points there, that would make sense. So I could be short-term long. Well, that's what we call a scalp. Same thing on Kiwi. Well, if this was forming at a take profit zone, that would make sense to me. Pound Swissy down, pass. Swissy yen down, pass. Why? I know the fundamentals because I've gone through the fundamental tab, right? Has anything changed in the last little bit when it comes to New Zealand dollar? No. What about Australian dollar? No. So selling or buying these things doesn't seem to be the current sentiment in the market. So maybe it's just technical. Maybe it's just today. Maybe it's just the next few hours. So I can very quickly just check the market and say, okay, should I go long Aussie dollar long term? No, I can't really confirm that as market sentiment right now. It might be true, I just can't confirm it. Nobody else really agrees. So if I went long Aussie dollar, I'm kind of going against fundamentals, and I'm kind of going against market sentiment, and I'm trying to beat the market, outsmart the market, and that's not what I'm trying to do. I'm trying to trade with the market. You see? You see how awesome this is? Okay, just go over today's schedule. We've done multiple live streams at traders.com already. Okay, so we're doing the Forex.Today one. I just did one on the fundamentals. I think there was another one earlier today on the open. Yeah. Okay. 3 a.m., 8 a.m. So there's already 2 there. So 1, 2, the third one that I did, third. This is the fourth. The fifth out, right? The fifth today is scheduled at 11 a.m. with David Pegler doing price action and more. And then the sixth event today at traders.com is today at 4 p.m., where I download and read the economic reports over the last 7 days. 6 events just today. What about gold? Gold. Yeah. Lucky, let me show you how easy that is. Lucky, you go here and you highlight gold. What about gold? There's the answer. What do you think? Lucky, does this answer your question? Okay? Never ask a YouTube guru their opinion on a trade or an investment. Never. You should have the data yourself. Okay. Now, maybe if that YouTube guru has been licensed and registered at some point, maybe they've passed some sort of investment securities test. Maybe they have an Ivy League degree in Harvard or in economics or finance. Okay, maybe they've traded $1 billion in 1 month. If they have those kinds of credentials, okay, you can ask them a question. But most gurus don't have that, or even close. So never ask someone else's opinion. They might possibly be a knucklehead. Because you don't need any qualifications to get on YouTube as a guru. You don't even have to be a guru. You just have to be a good public speaker. Okay, cool. So in this case, Lucky, you should just have the data. So there's a big score here, but technically we're still in a negative slope. Cool. Then you have to think through it. So what's going on in the oil market right now? Anybody paying attention to oil? Yeah. Well, we've been saying now for 3 weeks, I'm guessing, 4 weeks. The number was 67. Oh, look, we're there today. Okay. Fundamentally, there's lots going on. Okay. So the United States, Saudi Arabia, and Russia met 3 weeks ago to talk about Ukraine. Of course, I said that was nonsense. I said they're going to talk about oil. Okay? I need you to confirm here. I want to make sure you're following along. Did this is a yes or no. It's fact or fiction. So, fact or fiction. How about that? At that meeting, I suggested that Saudi Arabia, because of that meeting specifically, would increase their production of oil with the prime focus on lowering oil prices. And that it had nothing to do with the Ukraine. Okay, cool. Second part. Russia would be next. Now, I don't know when this one gets solved because we need an end to the Ukraine war, upon which the United States allows Russia to export its oil and gas in the free market again without its embargo. So the removal of Russian oil embargoes at the end of the war, which would also increase supply and also lower oil prices. Is that a fact? Because that hasn't happened yet, but that's the whole premise of ending the war soon. Okay, let's go to the next step. What other oil exporting countries have embargoes on their oil supply to the world? What other oil exporting countries have embargoes? Iran and Venezuela. All right, let's handle one at a time. Iran received a phone call today from Russia. And Russia was asked to make this call 3 weeks ago during the meeting in Saudi Arabia. And so the process is, hey, Russia, get Iran to play nice and we'll remove their embargo. Increasing supply, oil prices fall. Now, why would the United States want falling oil prices? Why would they want all of this? Lower inflation to offset tariffs. That then in turn, right, lowers inflation so that U.S. Euro US dollar surges as US Besant favors lower interest rates. So Besant wants the Fed to cut interest rates. Besant is Secretary of the Treasury. Secretary of the Treasury wants a weak dollar. So he needs the Fed to cut interest rates. So the White House, and Besant is part of the White House, needs inflation to fall so the Fed could cut interest rates so that the dollar collapses. They want a weak dollar so they can pay down the debt with cheap dollars, not expensive dollars. Meanwhile, the lower inflation offsets the higher impact on inflation that tariffs cost. So then Trump could then, in a low and disinflationary environment, raise tariffs and not have the U.S. economy instantly negatively affected, or let's say long-term negatively affected. But he could do it. He could raise the tariffs, create a new deal, lower the tariffs, and on the short run, the United States isn't hurt that much. On the long run, it benefits. And yet, the media wants you to believe a bunch of other crap. Like this Saudi Arabia meeting was about the Ukraine peace, or that the recent meetings in the White House with Zelensky was about mineral rights. No. It's not. It's not the truth. It's a false narrative. Yeah. Cool. Neat, right? So anyways, we have oil prices to fall. Okay, nothing new. We've been prepared and waiting for it to happen. It's happening. And so now we want to get to that next level, right? So let's go back to scorecards, industrial, oil. Cool. So somewhere in here, we're going to buy some oil. Cool. Is it ready to buy? No. No, it's not ready to buy. No, it is not ready to buy. Isn't that nice to just be able to get that? It's not ready to buy. Cool. All right, but how about 64 or 65? Yeah, I'd be open to that. Wait, what? Yeah, sure. Up. Well, let's do it a different color. Up, down. Okay. So let's say this happens. I don't know if that's going to happen. This is not a prediction. If you need me to predict something, I'm not your guru. I only do analysis. I'm only trying to make decisions. Okay? If I got something like that, I'm open-minded to buying it. Okay? How long am I going to be in this trade set up if that happens on the 1 hour chart? How long do I hold it? 1 hour? 3 hours? 12 hours? 24 hours? Talk to me, Goose. Liam says a day. 24 hours. Anyone want to guess? I've had it planned out for 6 months. I hope you fully appreciate that. If 6 months seems too long, let me change it. 4 months. I've had all of this planned out for 4 months. Now give me a time. Don't give me something loosey-goosey. Yeah. Okay, cool. So we can do week of the year, and it's this epoch. We are in week 10. Week 10. Week 10. Ooh la la. Week 10. Well, let's do a deeper dive. Let's do a deep dive, y'all. All y'all. Let's do a deep dive again. Let's do a deep dive again. All right. So week 10 and 11 are down weeks. Oh. Yeah, check that out. Week 10 and week 11 are down weeks. And we're having a down move right now. Oh, is that right? Okay, fine. And then we'll fizzle around for a few more weeks. Okay, in which there could be another buying opportunity right here, week 17. Well, what this could allow me to do, okay, is say I can start the process soon. These are weekly candles, but I am 2 standard deviations below the mean, which if I put this together, should I buy last week? No. How about the week before? 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 No. How about this week? Yeah, maybe. How about next week? Yeah, maybe. Okay. And I am going to hold until week 18, week 19, week 20. that kind of thing. So 10 weeks, somewhere around 10, hold to somewhere around 20. Okay? Or as Lucas says, till Canada Day. Oops. So I looked for an opportunity in the next 2 weeks, starting this week, not last week. So let's say in the next week or two, we get down here. Okay, down here is my projected low for the month of March. I've already had it projected. It can go a little lower than that. It doesn't matter to me. But in my trade plan, somewhere between this week and next week, if I spot a reversal pattern down here on a 1 hour chart, 1 hour chart, I will look to buy and hold for as much as 10 weeks. And your YouTube guru that scalps 3, 4, 5 pips at a time doesn't know anything about that. They can't think about the context of where we are in the normal supply and demand of oil. See, this has nothing to do with the chart. You have to understand that. I'm making decisions based on the business cycle of oil refineries, not my MACD. So Liam's like, a day. And Liam's like, 10 weeks? 70 days, Liam. Maybe 100. This is why I want you to join my team, traders.com. Let me on your team. Let me join your team. We spent an hour this morning talking about international bond markets. We were going to look at other fundamental things, but that's the tone of the conversation. We switched over and talked about international bond funds and its impact on various things. And we talked about the difference between different forms of capitalism and the cause and effect that they create. There's no good or bad. There's only cause and effect. There's only choice. We were able to have very intellectual conversations about very complicated topics in a very simple, casual format. It was pretty cool. Yeah, I thought it was cool. So I bring up traders.com, right? Here we are now, and check this out. Argentine bond yields. Oops, and then I pulled up something with an ad. Okay, and then I asked the question today. If you lend Argentina money, they will pay you 29% interest. Is that a good deal? I described why that is not a good deal. You're like, dude, 29% interest rate if you lend us Argentina money? Yeah, that's a horrible deal. You are guaranteed to lose money if you did that. But the question is why? Because the inflation rate is 85%, and despite that being good news, they have 85% inflation, which means you're guaranteed to lose money if you lend them cash for a year. Now, if you don't understand that, then you don't understand money. And this is what we talk about all day. But we also talk about charts. Yeah. You're like, Wayne, all that's gobbledygook. Well, I can prove to you it's not gobbledygook. But if it's gobbledygook to you now, well, I'm going to open your eyes. But you're like, man, it's all in price. Really? Okay, fine. So what are you doing today? Selling US dollar? Okay. Now, did you hear this? We're trying to implement something new on our Squawk Box, where not only are we pulling in headlines from news sources like FX Street and many, many others, but we're also trying to implement where the data is coming from these patterns. So you might have heard earlier today, now it's gone because it happened several hours ago, and that means the news is updated, so I can't pull it back. But I did hear it, an hour and a half ago, that pound yen is facing a head and shoulders breakout. And it came in our Squawk Box. So what I'm trying to do is get the Squawk Box not just to read FX Street for you and a bunch of other news-related websites, but to also watch the charts and keep you updated verbally. So anyways, here it is. But you should have already known because it was read out loud to you. Okay. Cool. So let's say today you're into that scalping stuff and you want to scalp the US dollar week. Okay. So turn everything off and then turn only dollar pairs on. This is how you trade, by the way. You don't look for trades. If you look for trades, you'll find something even if it's stupid. And I guess we have to just go ahead and do the correlation. All right, and then we'll do random. All right, and peso. Why not? Put them all on there. Okay, so our intent is, and I'm not suggesting this is the right decision. This might be your intent. Today, because of the skippity scalpy opportunities, you're interested in selling US dollar. Cool. This might be for you. This might be for you. This is not for you. See? Apparently, U.S. tariffs are bad for Mexico. Really? Okay. Now, this one is a little further out. If it comes up and rolls over, this will turn into a head and shoulders pattern. You can take that down. This is an opportunity. 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 This is a threat. This is a threat. This is a threat. So you have it. You have day trades and intraday trades, but you don't have any swing trades. Okay? This is a threat. Even though it's going up, this is a threat. Because the next leg should be down or could be down. Okay? This is a threat, and that's a threat. Done. So you might waste an hour looking for stuff to do. Not only did I look at the dollar pairs, I looked for reliable, repeatable patterns on the dollar pairs, and then I filtered them by direction. I'm only interested in selling dollar. And then I looked at all 5 time frames on all of these and only looking for directional trades based on short-term bias or sentiment and for reliable, repeatable patterns in that direction. And it just took me 10 seconds. It'll take you an hour, and you probably don't have that degree of planning. So you can continue to trade like an amateur, or you can join traders.com and start trading professionally with institutional quality decision making. I mean, why fight it? Yeah, it sounds like a sales pitch. Yeah, get over that. How else am I supposed to convince you? Oh, he's just selling me. This is better than what you do if you don't do this. So you should say, oh my God, how do I get in? That's the reality of it. Okay? That is the reality of it. How's the stock market doing? Down, 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 down. Up on the daily. Interesting. Maybe a breakdown here on the daily, though. Uh-oh. Yeah, NASI and S&P 500. Okay, so what's going on here? So remember, all these patterns have not formed yet. They're in the process of forming. So if we have a breakdown, then this pattern, this rising wedge, dies. You understand that? If we drop to here and then come up and then sell off of that price, the U.S. stock market's going to drop 20%. Oh my God, Wayne, that's serious. Well, look. What about NASDAQ? Yeah. Same thing. Is that the future? Yeah, well, you know what? Yeah. And then what? Will this be a rising wedge? No, dude. Think forward a little bit. Crown pattern, head and shoulders pattern, whatever you want to call it. Whatever, dude. Call it whatever you want, but call it. Cool. So it's going to fall if that occurs. If that occurs, this is no longer a rising wedge. We'll call it a crown or a head and shoulders. Okay. Or we'll call it a new, it's just a new channel. Okay. Whatever you want to call it, doesn't matter. Down. Cool. So it's going to fall. It's the end of the world, right? No, it's going to make me filthy, stinking rich, because I'm going to let it fall and then I'm going to buy it cheap. Wait, what? How do I know to do that? Because I have the data. Wait, what? It's the end of the... Oh no! Configuration error! What? Let's see if I can get past this. We'll pull it up on a different part of the database. Okay, this month, next month. Is this going to play nice with me? Let's see. No, I want to see if I want this. This is the one. Oh, really? It's that broken. It just worked. No, something snapped. Huh? Hey, look, it's a real database, everybody. These things happen. There's real data behind it. It won't load, huh? Interesting. It's funny how it worked and how it doesn't. What happened? Well, anyways, what is important to me is I share the thought. If you had some data that suggested the stock market declines this time of year, so it's normal, then you're not freaking out. Even if it drops 20%, you're like, well, it's the right time of year for it. And then what if you had data that suggested somewhere between March and April? Let's say somewhere between the middle of March and the middle of April. There's normally a buying opportunity. And you held it not for hours or days, but weeks or months, or maybe forever. Would it influence the way you make decisions? Now, what I'm finding is you think the answer is yes, and then you sign up for traders.com and you use the data, you listen to me every day, and then you do what you used to do. And it takes process. This is why you need performance coaching. It's hard to start. You have to change your behavior. And then so you have to get the data, interpret the data, and then incorporate the data into your decision-making process and then make better decisions. And this is why you can't just have the data. You want performance coaching. And so if you thought often there's down for now, and then over a course of 3 or 4 weeks, the down becomes stable and then stable becomes up, would you incorporate this into your planning? And that's where you confirm or deny things with technical analysis. And so maybe the stock market drops 10 or 20% in the next 5 weeks, and you're not freaking out about it. In fact, you're just waiting. You're like, okay, well, if this falls down to this level, and then I see that kind of reversal, then maybe I take a shot. Okay. Lucky, is it available? I'm not sure what you're saying. Are you saying for Amazon.com? You trade Apple or Google, Tesla, Chevron, and NVIDIA. I believe we do have Amazon on there. Yeah, we do have it. There's just no trending patterns. But if I turn all the patterns on and only trade Amazon, and I'm not sure if that's what you're asking, but let's just pretend that is. There's nothing available. There's nothing interesting with Amazon right now. Not technically anyways. There's no reversal patterns. There's no trending patterns. There's no up pattern, no down pattern, no sideways pattern. You probably should focus on something different today than Amazon.com. How lovely, Tulumum. So I'm going to go back to just trend patterns. Hit save. Cool. Okay, lots of things going on with crypto. So I will let you go. That was real. I hope you thought it was real good. Could you click the thumbs up button? Traders.com, fundamentals, technicals, sentiment. Tradersway.com, execution. Match made in heaven. We have great performance coaching. So David Pegler's next at 11 a.m. He'll blow your mind. And then my thing at 4 is pretty good. So I'm going to download and read economic reports. Yeah, I know. Sounds exciting, right? Yeah, well, necessary. You might learn a little bit about economics. Cool. Well, I have a degree in economics, so I'm happy to share. And with that, I bid you adieu. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day. Be small, be humble, Focus on the long term. Never risk money you cannot afford to lose.